Hey, it's Patti Scharf, CPA and co-founder of Catching Clouds, the leader in e-commerce accounting. And today we're going to continue our series on understanding financial statements. Today we're going to cover the income statement, which is also known as the profit and loss statement. I think this is the one financial statement that I think is most intuitive for most people who are just starting out. It really only has two items. One is income and the other is expenses. Everything else is a variation on those. So the income is shown at the very top of the account, or on the top of the financial statement. And basically that's a summary of all of the different sales that you've made during a particular period of time. So unlike the balance sheet, which is just a snapshot on one day in time, the income statement will cover a span of time, usually a year or a month or a quarter or even a week or whatever. But it has some amount of time that it's keeping track of. So when you're looking at your sales for, say, 2017, those are all the sales for that entire year. The revenue is always up at the top. The next line item down is cost of goods sold. Sometimes it's called cost of sales, but for online retailers, it's always going to be cost of goods sold. The things that are in cost of goods sold are straight on cost of goods sold. So what that is those products that you purchased that you are selling to your customers. When you purchase the products, you don't automatically put it on your profit and loss statement. Otherwise it would be called cost of goods purchased, which it's not. It's cost of goods sold. So those sales should align with the sales that you've made. So you buy a product, you sell it to a customer. When you make that sale, your cost of buying that product becomes an expense on your profit and loss statement as cost of goods sold. Some other items that should be included in your cost of goods sold: inbound shipping, basically any of the costs of production, any of the costs of getting that item ready to be sold should be included in your cost of goods sold numbers, whether it's separately stated in this section or it's included in the actual cost of goods sold calculation. That's up to you, but it should be included in there when coming up with your gross profit. Gross profit is just sales minus all of your costs of production. Then everything else below that line is an operational expense. It's going to be things like payroll, bank charges, advertising. One of the things that a lot of accountants like to argue about is merchant account fees. I actually put according to GAAP, which is generally accepted accounting principles, merchant account fees, so things like your Stripe fees, PayPal fees, any of your credit card processing fees, according to generally accepted accounting principles, those should be an operational expense. But I like to put them in cost of goods sold because I think financial statements should be useful for the owner of the business. And that is a cost that is directly correlated with sales. As your sales go up, your merchant fees go up. As your sales go down, your merchant fees go down. Online retailers, they can't avoid those merchant account fees. So I feel like it's almost a cost of goods sold. So I think it's more helpful to put it up there, but the technically accurate way is to put it under operational expenses, and accountants like to argue about that stuff. Other operational expenses: insurance, legal fees, postage, shipping to your customer. So the shipping that you have going to your warehouse or to Amazon or something like that is part of cost of goods sold. But any of your shipping that goes out to your customer should be an operational expense. Computer expenses, website services, shipping supplies, all that kind of stuff, those are all operational expenses. And this is really just basic math. Income minus cost of goods sold minus all your other operational expenses is what gives you your net income for the business. Obviously, you're looking for a profit. You didn't go into this business so that you could lose money, but this is what this statement is telling you. One last thing I want to say is you want to be sure that when you're recording your expenses and your income, that you know whether your business is on cash basis or accrual basis. I have another video that you can watch that gives you a little bit more information about that. But when you're managing your business, you really want to make sure that you're comparing apples to apples and that you know what it is that you're looking at. So hopefully you found this video helpful. If you did, please like, share it with your friends, comment, and if you haven't already, please subscribe, and I'll catch you next time.